Today, I have some thrilling news about SoFi to share. The stock had an absolutely epic day, and I want to break down exactly what drove it higher, what the shorts did, and everything else you need to know.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that,
Alert, this is not a financial advice video.
SoFi saw a remarkable 5.16% increase in after-hours trading, with an additional slight bump of 0.82%. The volume was significant, with 56.7 million shares being traded, compared to the average of 32.8 million. As I've mentioned in previous videos, it's crucial to determine where this volume is coming from. If it's algorithmic trading, the impact can be somewhat hollow. However, this time is different. There's been a noticeable amount of institutional buying, with transactions on the secondary market above $100,000, totaling 1.39 million shares. First thing in the morning, there was a significant uptick, likely due to market makers covering options that expired in the money last week. This emphasizes the importance of those options. Overall, it was an epic day for SoFi. Just a week ago, I was unsure if FOMO, fear of missing out, would kick in with SoFi. Well, I was wrong. There's a lot of institutional interest in SoFi, especially after the CPI Consumer Price Index data and other economic indicators were released. There's also optimism about potential rate cuts. Today is noteworthy because there's a 91.9% likelihood of a 25 basis point cut at the September 18th meeting. The chance of no change has dropped, and there's an 8% likelihood of a 50 basis point cut and a 0.1% chance of a 75 basis point cut. I don't think a 75 basis point cut will happen. More likely, we'll see back-to-back 25 basis point cuts, followed by a 57.9% likelihood of another 25 basis point cut on November 7th. This is fueling SoFi and other fintech stocks. It's not just SoFi. Broader market conditions are playing a role. There have been no new SEC filings or analyst ratings for SoFi, and the stock is somewhat in limbo. Let's talk about the technicals and key points to watch in the coming days. Today's shorts returned 192,000 shares, slowly admitting defeat. Currently, 17.74% of the free float is being shorted, equating to 184.15 million shares. There's been a glitch with Ortex, so the cost of borrowing minimum isn't shown. Over the past several trading days, this cost has been negative. Some comments suggested it was Interactive Brokers, but that's not the case. Interactive Brokers charges 0.45%. Across the board, around 4.9 million shares are available to be shorted. Utilization is at 67.27%. This week is crucial for SoFi. Historically, once it surpasses the 50-day moving average, the stock price sees a 30% bump. Shorts should consider returning shares to avoid potential losses. The technicals are pushing SoFi higher, and there's likely to be more FOMO as we approach their earnings report. The broader market optimism is creating a win-win scenario. The Fear and Greed Index is at 62, indicating a strong appetite for risk. Now, let's discuss options. Today, $17 million in calls were purchased, compared to $2.76 million in puts. That's an enormous amount of bullish activity, especially around the $8 range. When looking at options, it's important to pay attention to the closest strike price. If it's close, it's often for hedging purposes. If it's farther out, like the $8 strike price, it indicates true optimism. There's a lot of bullish sentiment among investors. Open interest stands at 53,000 for the $7 strike price, 11,000 for $7.50, and 72,000 for $8. SoFi might struggle to break the $8 mark, but it's possible. I'll discuss Elliott Wave technicals and updated price targets shortly. If SoFi closes above $7 by the end of the week, we could see a nice bump in the stock price. Switching over to Interactive Brokers IBKR, the Elliott Wave technicals show a pivot point of $6.41. As long as SoFi stays above this level, it's anticipated to reach the $7.50 to $7.78 range. There are no new analyst ratings, just the existing ones. $11 hold from Deutsche Bank with a 63% success rating, and $7 and $8 from other analysts. The bullish ratings often get overlooked, while bearish ones cause panic. Let's look at some additional data points. After hours trading has SoFi at $7.39 between the R1 and R2 resistance points. The $7.50 mark is a strong resistance target, while $7.21 is the next support level. Watch these levels closely. If SoFi breaks above R2, it could test the $8 range. Typically, SoFi needs to close above the 50-day moving average for at least 2 days to see a run-up, around 30%. Today is day 2, and the technicals look promising. Retail investors are also getting in, creating a unique situation where both retail and institutions are buying simultaneously. This is rare and very positive. The stochastic indicator is bullish, with the white line above the red, but it's overbought at 84. A pullback could happen at the first sign of weakness. This isn't to spread fear, just to be aware. Whether it's an analyst rating or other negative news, the market might react strongly. In conclusion, the technicals look very good for SoFi. It might test the $8 mark by the end of the week. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.